and looking at our intraday chart here from Friday, you can see that we came in, with another little gap up open. We saw quite a few of those February week 1, a little tumble down right into the 20 EMA line, and then from there we took off and eventually made our high for the day, a new all-time high at 38.94.56. And then we fell back a bit into the afternoon, but closed pretty strong. Missing a close above 38.87. This was originally our measured move target coming into this year, a doubling up of the December range. Obviously took that out, but we did not close above it, and I wonder if that has any meaning or not. Maybe not. Maybe it just means that there was a lot of short interest in the calls from 3,900 to maybe 38.90 to end the week. So maybe that's all it really was about. And a lot of times on Monday, we'll see leftover bets from Friday continue on. So if we don't make a new all-time high, or but then come back and close above Friday, we're certainly going to go on to a new all-time high on Tuesday, because usually when we get that all-time closing high without the new all-time high to go with it, that's bullish. But if we come in Monday and we make a higher high above the one we made on Friday, and then fall back and close below Friday's close, that's bearish. That's usually the signal that we're going to see some continuation to the downside. So that's some thoughts. Oh, another thing too about Friday's close is it was a new weekly all-time closing high for us. So when we get to the end of next week, February week 2, this week that we're about to trade, if we don't close above this 38.86, 83 level that we closed at on Friday, that's missing the weekly all-time closing high, and it's probably going to frown on us bearishly for February week 3. Another thing coming up this week, February week 12 marks the start of Chinese Lunar New Year. We often see the market rally up ahead of that and then flatten out and even correct during Chinese New Year, because they're closed. Their markets are closed. They're not buying oil. They're not trading. They're not doing anything. So we often see the markets pull back during that time, when that huge economy is basically not in the market at all. Okay, let's take a look at our the roadmap first. Okay, these purple bars on the chart represent gaps that we've made. So here is a huge gap that we made between Monday's close and Tuesday's open, and that is holding wide open, and it's going to be a huge level for us to come back and fill at some point, whether that's going to be this week or week 3. On the way there, we have these two smaller gaps, the one between Friday and Thursday, and the one between Thursday and Wednesday. And we've got our 10 and 20-day simple moving averages that are kind of in a tangle together. One of them is going to break out over the other, and that is going to be a factor as well, because if we come down and we break these, we're probably going to take the range that we've made from there to where we break one of these moving averages and double that down, and that's most certainly going to get us at least back down here to fill the February 1st gap. Another thing headed towards that February 1st gap is the 50-day simple moving average. It would probably be nice if we got it over with and filled this gap, or got into this gap and reversed before the 50-day gets in here, because otherwise there's the chance that we'll break that 50-day simple moving average again. If we break that again, I do not even know if this low during January week 5, on that final Friday of January that we traded, where we broke down and closed below the 50-day. I cannot believe that we came in and rallied like this the week after doing that. This is like one of the worst things you could possibly do. But I guess it was the ultimate head fake, because here we've rallied onto a new all-time high from here. I guess that really washed out a lot of weak hands. But if we come down here again and break the 50-day, I don't think it's going to be this cute little head fake thing again. I think it's going to be a much more serious event, and we're going to go a lot lower than we did in January week 5. Okay, let's take a look at the simplified daily chart to think about where we might go if we're going to go a little bit higher. We have a median line of this bull fork that we have watched throughout the course of the last several months, and every time we come up to it, you can look left on this map here, daily chart. And you can see that every time we make an all-time high, it's a move above the median line of this fork for a few days, and then we make a close back below it and struggle until we come back up again. And you can see our last two highs during the course of 2021 already, we're up against this median line. And if we were to come in Monday, We might still have some lagging and some blockage below 3,900 on Monday. Like I said, a lot of times option bets from Friday lag over into Monday. So maybe we're going to see, 3,900 get blocked out. But if we make that move out from underneath 3,900, be it Monday or if we don't see it till Tuesday, I think we're going to be aiming at the median line of this bull fork. And right now, it's all the way up at 39.19 on Monday. It's going to keep rising. And by the time we get to Friday, it's going to be all the way up here at about 39.40. So to take a look above that, that's what's going to get us to 39.50. And I will show you the volume in the options sort of resides around 3,900, and then it sticks out again around 39.50. So that would be the target if we are going to have one more leg of this rally in store for us this coming week before we see that Chinese Lunar New Year kick in and the markets kind of slow down. Taking a look at this same chart backed out, this is I want to talk one more time about that downside move that I spoke about when we were looking at the roadmap. Here's this little gap here and this little gap there that we would fill, and then here's our 10 and 20 day, and then here's that big gap, the one to February 1st. And look where it holds. It holds us above the January halfway back and the December close, the point where we go 2021 negative or stay positive. And our 50-day simple moving average is rising up very quickly there. So this is what I'm talking about, that if we break all this stuff, break down below this close, break down below these levels, and doing it by the time the 50 days getting up here and break all of that, I think we can take this entire move from here to here and double it down, and look where that gets us. That gets us at least to the December low. So if we break this low that we made in January week 5 and we break to a new 2021 low below the one that we made on the first day, I think we'll at least test our December low here at 33.40. But like I said, that might come once we make this move up here above the median line. Okay, so we'll just want to put that thought in your mind, and also look what's here, the bottom of this fork. So I just think it's kind of an intriguing correction that we could be looking for in the coming, maybe not until starting till the end of this week that we're about to trade, but certainly maybe in February week 3. All right, here's where the volume is concentrated in the Friday, February 12th options. Friday, February 12th is when the Chinese Lunar New Year starts. They're concentrated in the 3900s. If this is short interest, driven, if this volume was people selling this, then this open interest level is not going to rise that much on Monday. Right now it's just under 6,000, and almost 7,000 of this moved on Friday. So let's see if we get an open interest over 10,000, maybe 11, 12,000, then we know that this is long, and we're probably aiming to get over 3,900. Maybe starting on Tuesday if the market is still a little, weak and holding back 3,900 on Monday. And beyond there, you can see the volume really starts to kick in again here around 39.25 and 30, and then of course up here at 39.50, and that's that move to the median line on the bull fork. And this is where the $5 window entry on Friday expiration was as we went out the door on Friday. Here is where the volume is concentrated on the puts at 3,800. That aligns to getting this second small gap filled, but maybe holding or not there, and then winding up breaking the 10 and 20-day simple moving averages and getting down here to look into this big gap to February 1st. That's what this open interest is about here. I'm sorry, this volume is about here. And we'll see if this open interest rises or not come Monday. It went out at about 7,200. Let's see if that's around 10,000, 11, 12,000 come Monday. Then we know that these are long put holders that are buying protection for that move next week, maybe later on in the week. And then you can see volume kicks in once again down here at 37.75 and 37.50, and that's all about coming down here and testing and holding or breaking and doubling down that move down here from where the 50-day is, where the halfway back is for January, and the December close where we are 2021 positive or negative. Okay, that's it. I don't want to drone on for too long because then I start repeating myself, because this is probably the third or fourth time I've tried to shoot this video. Have a great rest of your Sunday. Enjoy the Super Bowl. Probably going to be quiet on futures tonight because everybody's watching the game. But let's see what the European Open and the 3 a.m. crew does for us overnight on ES later on, okay? Have a great rest of your Sunday. As always, good luck and good trading.